Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday the 31st of October, and Halloween gives us some horror in the small caps today, but we'll see that a bit later. At the moment on the FTSE 100 you can see that we bounced again off what is the notional support band for this market over the last year, 7,200 to 7,300. Probably only an end of day close now below 7,300 would give us the potential of a move down to the floor of that falling February trend channel at 71.50. Otherwise, we're hoping that we'll be able to get back above 73.70, the initial September support, and head back up to 74.30, which was last week's resistance. RSI at 38, so still the potential for a move down to oversold territory. 2 days of downside maybe, and then we have a low for the market. Moving on to the DAX, which has been struggling to say the least in the recent past. It looks as though it's found some support there near the March support area, 14,500 or above it at least. Just need to break that line there from back in May, old support line, 14,800 above that. Then we're hoping to fill the gap up to 15,000. But at this stage, that's probably the best we are looking for. Onto the Dow, and here situation is rather better. We've managed to close back above the initial October support there, 32,800 above that. We're hoping for a revival back up to the area of the 200-day moving average, 33,800. But I think at the moment that is still the best case scenario. The other positive, or a positive at the moment, is the way that we had lower lows for the end of October rather, but the RSI didn't go that low, and therefore we are looking at bullish divergence. Moving on to Bitcoin, which has been the star of the show over recent weeks, and we're hoping that that will remain the case. That we're at the top of that notional channel there, around 34,000. Want to see an end-of-day close through 35,300. Recent resistance to give us a target as high as 43,000 by the end of next month. Ideally, we don't go back below 32,100, the old summer 2022 resistance for this market. Yesterday gave us a golden cross between the 50 and 200-day moving averages, which is much appreciated, although so far we haven't actually had any follow through on that. Can't resist at looking at gold at the moment as well, where we're still trading either side of the $2,000 level. The upside here potentially up to 2,050. The 2050 area, a May resistance line projection at the top of a triangle in place since that time. The other point to note is that we have both the 50 and 200-day moving averages rising rapidly at the moment, which means we're probably around a week or two away from a golden cross, and the run-up to a golden cross can be and tends to be the strongest part in the cycle. Only back well below 1960, old September resistance, and recent support really delays the upside on gold at the moment. Moving on to the stocks, and starting off with Cellular goods, where you can see that it looks like it might be third time lucky. Seems to be a lot of sellers around the 0.6 level, but we can get an end of day close through 0.6. We could head up to a penny maybe as soon as the end of next month, which is the top of a post-June broadening triangle. There's also bullish divergence coming in there, so lower lows in the last week, but the RSI staying actually higher than it was on the previous dips. On to the bear's best friend, which is Canadian overseas, and here the share is trying to resist that pressure. It looks as though there are some signs of bottoming out here. We've got an uptrend line in the RSI window, which I'm just about to draw, and we've broken a line of resistance from earlier in the month around the 1.8 pence level. That's not much, but above 1.8 we could head up to as high as 2.5 pence by the end of next month if we can build on the recent strength of the last 3 sessions. Not too many bullish situations around, but Cornish metal seems to be holding up quite well. We had a bear trap gap reversal, bear trap from below the July support there at 9 3/4 pence, and we built on that. We broke the gap higher day at around the 10.9 pence level, or 11 pence in fact, and above 11 pence looking for as high as 15 pence by the end of next month. Nice bullish divergence going into the lower lows, lower price lows for October. The highlight of yesterday was the rally in Cadence Minerals, and the shares following up on that with news of director buying, the CEO stepping up to the plate with the broken resistance line there from May at 7.5 pence. Above that, we're looking for 12 pence by the end of next month, and ideally we stay above the 50-day line at 6 3/4 in the interim. Bullish divergence again backing that particular move. Onto a stock which I interviewed last week, Empire Metals. We already had the technical buy signal, so it's bear trap gap reversal, gapped up last week, and we've held that gap. We're now above the 50-day moving average at 4.4 pence. The longer we stay above the recent neckline resistance of 4.25 pence, the greater the chance of a move to 6.5 pence by the end of next month, which is the top of a rising trend channel from December last year. GreenRoc is next, and here you can see that the shares have made good progress after another bear trap gap reversal and bullish divergence, so that signal, or that combination of signals, has worked. We're looking for at least 5 pence over the near term, maybe over the next couple of weeks. Just hoping for the 50 and 200-day lines to start curving up, which should help the cause as well. Only back below the 50-day line at 4 pence, really delaying the upside. More news, positive news from Kromek, and the shares building on the bear trap gap reversal and bullish divergence combo that we've had in the last couple of weeks. Finding support there at and above the 50-day line at 4.25, above that, and above the gap from last week. Looking for 5.8 pence initially, and then maybe up to as high as 7.5 pence by the end of next month. I mentioned Greatland Gold yesterday, and the shares trying to edge towards that 10 pence level. That's the top of a broadening triangle from basically this time last year, and we're looking for that while we hold above the 8 pence area, which is now effectively a neckline resistance for the shares. The 50-day line was already rising, and in fact the 200-day line starting to rise as well, so that bodes well for a move towards 10 pence over the next few weeks. If you're a fan of the shares and looking for greater glory, then the next level up after 10 would be as high as 11, which obviously is not great in numerical terms, but helps a lot on the percentages. Next stock on the list is Kodal, which got its financing over the line after a bit of a delay, and here we're looking for the shares to basically break 0.65. If they can do that on an end of day or a weekly close basis, we should be looking at a target, or at least a retest, in fact, of April resistance at 0.9 pence. Maybe as soon as the end of next month. You can see that in April the shares really motored from 0.4 to 0.9, and maybe they'll do that again for October, November. 50 and 200-day moving average is already rising, so we're about a week or so away from a golden cross between those two moving averages. Haven't looked at React for a long time, and maybe won't look at that for a long time again, but in the meantime we've got a rising trend channel here that's been in place since the end of summer 2022, looking for 2.2 pence by the end of next month, while we're above the 1.5 pence area. It might take a bit longer than that, but the pattern there looks strong. Stock which is the trading nightmare is THG. Here we've had a bear trap rebound from below the September support, 64 pence. Want to see an end of day close basically above 70 to give us the chance of hitting that August resistance line at 80 pence. By the end of next month, and hopefully a bit sooner. There's bullish divergence kicking in as well, so that also bodes well for a move towards the 80 pence, or even more than that. There's a gap there at 85 pence to fill, hopefully later this autumn. TomCo is next, and always a bit fiddly this one, but you can see that the shares are still above their 50-day moving average at 0.06. That means we're still looking for a retest of August resistance at 0.12, perhaps as soon as the end of next month, and the whole move, or the recovery, backed by bullish divergence, a bullish divergence line there in there from June. On to the last two. First one is Wishbone, which is feeling the benefits of the better gold price. We've got a rising trend channel there from July, and we've got a rising 50-day line at 2 pence, above 2 pence, looking for 3 pence as soon as the end of next month, although that 200-day line there at 2.5 pence, a bit of a barrier for progress. Finishing off with a stock which I haven't looked at for years, if not many years, in fact, that's Zotefoams. Here we've got a double bear trap island reversal, so we gapped down twice and then we gapped up, and we've also broken that line of resistance from September around the 283 pence level. Above that we're looking for 310, as soon as the end of next month, and perhaps even more. Good bullish divergence there as well, with the lower lows for the end of October, but the RSI actually pointing up there, so it looks like a decent situation. That's it from me today. More updates tomorrow.